Good morning, Kinaway members, and welcome back to another episode of Kinaway TV. I just want to apologise we had a few technical difficulties this morning, but we're back and ready to go. So I'll try and keep this brief. As always, I'd just like to start the morning off by acknowledging the traditional owners of the land on which we're all meeting and pay respects to elders past, present, and emerging. Before I introduce today's guests, I'd just like to remind today's viewers of a few support services currently available to access through Kinaway. I'll just mention them briefly, and if you'd like to know some more information, please get into touch with us here at Kinaway, or you can look through some previous webinars to find out some more information about each individual support package which may be available. The first is the business tax support package. This support helps provide access to a range of bookkeeping and accounting services, preparation and submission of tax returns, BAS statements, online access to Xero and MyOb, and a few other components of that too. So if you feel it might be of interest, please jump onto the Kinaway website and fill out an expression of interest. Another specialist support service which will be delivered soon is all around digital capability for member businesses. It's currently not available, but it will be available very soon. Another one to the above packages is, and it's in collaboration with Claystone Marketing, one of Kinaway's members. Is free access to the Claystone Social Media and Marketing course. The course provides an overview of some social media marketing strategies and tools which will help highlight marketing opportunities for Indigenous businesses. In another collaborative effort, Kinaway is excited to partner with Boost Legal Templates. Designed for small businesses, Boost Legal Templates gives you clarity, safety, and access to real quality legal templates. All you will need to do is just fill out a friendly questionnaire, and you will instantly receive your own legal template, which you can take pride in knowing it has been created specifically for your business. This collaboration will save member businesses time, money, and ensures businesses are on the go while implementing good business governance. Kinaway is proud to offer members a 25% discount across all Boost legal templates. So if you feel this is something you may be interested in, please contact the Kinaway team. Another support service I'd like to mention is the confidential phone crisis line for Victorian Aboriginal and Torres Strait Islander people, launched by the Victorian Aboriginal Health Service. The service is for Indigenous people and families who feel they may need to have a yarn with somebody about their wellbeing. This 1-800 helpline is a statewide social and emotional wellbeing service, and the number is 1-800 95 9563, and you'll find their contact information on the screen throughout today's webinar. And as always, Kinaway is here providing support to our members. So if you feel you might need any kind of support or assistance, please feel free to reach out to the team here. For this morning's webinar, we're pleased to welcome back Matthew Karakalakis from AMK Law and Boost Legal Templates. Matty is a commercial lawyer and founder of AMK Law, a multi-award-winning boutique law practice, and is strongly regarded in commercial dispute resolution and litigation. Matthew's Aboriginal family heritage is from Narunga, Yorth Peninsula, South Australia, born and raised on the Kaurna lands. Now, for this morning's webinar, Matthew will be giving participants an understanding on how crucial it is for businesses to have the right business structure and how each structure may have an effect on key business functions and viability. Matty will cover some topics such as the common types of business structures, such as sole traders, companies, partnerships, and trusts, and how these structures affect your licensing, tax obligations, potential personal liability, and control over business. We hope you enjoy this morning's webinar, and if you have any questions throughout, please post them to either Kinaway's Facebook or YouTube channels, as we will have some time after the presentation for Matty to answer any questions. So without taking up too much of your time, I'd like to welcome Matt to today's webinar. We hope you all enjoy, and don't forget to leave a like, comment, subscribe, and turn on the notifications for Kinaway updates.
Introduction, and it's a real pleasure to be here presenting for Kinaway and Kinaway members. I'd first like to give my acknowledgement to traditional owners of the land in which we're in today, pay our respects to our Indigenous elders, past, present, and future. It's a real great opportunity to hear about business structures today. So what we want to do in terms of the objectives is give you the understanding of the different types of legal structures, help you understand which legal structure might be best for you and your business, tell you about some of the ins and outs of the different business structures so that you can understand and have that informed decision that you need most. And also share the exciting news and give you some insight into how Boost Legal Templates works. Boost is an amazing product. We've tailored and focused on Indigenous businesses when designing this product. And the investment through Boost is a terrific thing that is being brought by AMK Law, and we're excited to have Kinaway on board in this as well, and excited to share with you all some insight about Boost today too. So the good thing is today we've got our presentation in full screen mode. Last week I had it the smaller screen, so my upskilling of technology with PowerPoint has definitely increased in the last week. So I'm going to share this quote with you. The quote is by Orison Swett Martin. It says, "Our vision are the plan of the possible life structure, but they will end in plans if we do not follow them up with a vigorous effort to make them real. Just as the architect's plans will end in his drawings if they are not followed up and made real by the builder." And so you might be looking at that quote first up and thinking, gee, what's that got to do with business structures? Well, the reason why I like this quote is it's really important to have the right business structure in place. The business structure itself is what makes the life in your business possible, and having that legal structure in place really does need to be seen as that very first step that you take in making your business a reality. So what I would love to share with you guys now is the different business structures. The best time in getting your business structure right, as we were saying just a moment ago, is at the very start of your business. Because in these early days, there's protections that you can get in place to make sure that your legal liability is in the right position, to make sure that you're legally protected so that you can sign your contracts and get the jobs and sales through your business in the right format. The other thing is, even though I'm not an accountant, the business structures each do have particular tax implications, and since I'm not an accountant, I'll give you some insight on those today, but I really do suggest that you speak with your accountant and get some more information on the tax side of things to help you understand the right business structure for you moving forward. So different types of business structures: sole trader, partnership. You've got companies, trading trusts, cooperatives, and you have incorporated associations. Let's go through them now. And in particular, what we're going to focus on, we're going to cover each of these, but I think that most of you guys are best off in really understanding about sole trader, partnerships, company. I say that because it's they are really the most common forms of business structures. Now, a sole trader is essentially, when you start up your business by yourself, you're operating the business under your own name, and it's the simplest form of business structure. The establishment costs are really low. Registrations and government requirements are a lot lower. You can use as a sole trader the same tax file number that you use, for example, as you use when you're an employee. You can enjoy all the capital growth, profit, assets that your business acquires in your own name. There is no legal separation between you and your business. So what that really means is, from a legal standpoint, your liability is exposed on that personal level. That's really important to understand, because the business considerations with respect to structures need to have proper understanding and focus on those legal liabilities. So that's really the downside for sole trader, that personal liability. The other biggest downside for sole trader would be the tax considerations, particularly as you go forward with making more money in your business. Profit from the business is treated as your own individual income. So that means that your own individual tax bracket applies, as opposed to, say, a company that has the flat tax rate of 30%. You don't have to prepare any separate tax document for your business. Your tax return for the business is your own individual tax return. The business income is reported based on your own personal returns. And as I mentioned, your personal tax file number is also the tax file number that's used for your business. Now, partnerships. Whenever anyone speaks to me or asks me a question about partnerships, I get a bit of an icky feeling straight away. Why is that? The reason is because partnerships themselves have got very serious risk. The risk is to do with the joint and several liability. Joint and several liability means, just say you and I are in a partnership and I get into a financing arrangement to do with a particular business asset. I didn't tell you anything about it. We don't make those repayments. Then all of a sudden I go broke. You can be personally liable because of the partnership and that joint and several liability position. I had a situation where I was representing a client in the recent past. The client was part of an investment partnership. He was working full-time as a pharmacist. He was operating a chemist business and had just really invested into this partnership and was essentially a silent partner. After a couple of years since that investment was made, the tax office came knocking on his door and said, "Hey, you owe us this tax bill." He was shocked. The advice that I gave him at the time was, unfortunately, because of the partnership structure, you are liable because of the joint and several liability. We managed to negotiate a good outcome for him, but it still meant he had to pay that tax debt from his own earnings, which really does highlight the difficulty with partnership. So I've said that at the outset, but let's go into a bit more about what a partnership actually is. A partnership is where you've got two or more people that are carrying on a business with a view to making a profit. The Partnership Act in Victoria defines partnerships very widely, and if you look like being a partnership, you probably are because of how wide the test is. If you do decide to still be in a partnership despite the information I've shared today, it's really important that you have a partnership agreement. The partnership agreement can set out a whole range of things about how the partnership is to operate, and it can also help in some ways with respect to some of the risks and liabilities, but the legislation provisions under the Partnership Act is always what comes first. Now, a partnership itself is not a separate legal entity. So you've got the two people there, two or more people in that partnership. So some of the advantages to do with tax and being a bit easier to maintain and things like that we touched on with sole traders do apply with partnerships. Each partner pays tax based on their own personal tax bracket. You do need to complete a partnership tax return, however, and a partnership does have to have its own tax file number. Now we're stepping into probably my favorite business structure, and that is a PTY Ltd company. So PTY Ltd company is when you've got members who are shareholders who own the company because they own shares in that company, and you've also got directors who make decisions about what's going to happen in the company, how the company is going to be run. And what's good to know is, whilst the directors do need to be natural people, individuals, people like real people, members themselves don't have to be real people. Companies and other structures can be members. And some of you might be thinking, why is he speaking about real people? The reason why I say that is a company in its own right is a separate legal entity and has most of the same rights as what a natural person would have. So a company in its own right can sign contracts, enter into arrangements, can hire people. One of the great things from that, though, is that the company itself protects members by what's known through some of the cases as being the corporate veil. It's the protection from certain liabilities that members and even directors can have in certain circumstances, or most situations, really. There are some certain circumstances where the corporate veil itself can be overridden, so you can have directors that are personally liable, for example, but that's more seen as being the exception rather than the norm. So really, I want you to appreciate the liability protection that you do get from having a company structure. A company itself pays tax at the company tax rate, currently 30 cents in the dollar. Compliant costs are a bit higher for a company. There's a slight setup cost. You do need to have a company constitution. You're best to have a shareholders agreement. So there's a bit more legality involved in setting the company up. But I personally think most of the time it's worthwhile. That said, make sure you get your own legal advice on the right structure for you. Now, I want to touch on the remaining structures just quickly. And I say quickly because these are less relevant for you and your businesses. But what you can know about is there's cooperatives. That's essentially where you've got a member-owned business structure. You've got members who have got equal voting rights. Their members need to help run that cooperative. It's a separate legal entity, but it only allows a limited distribution of profits. That's probably one of the main reasons why a cooperative is not normally an appropriate business structure for our Indigenous businesses. And the whole focus of a cooperative is to provide a service to members rather than making profit or return through business enterprise. Incorporated associations, there's a ton of incorporated associations. There's, I think, about 40,000 incorporated associations in Victoria. These are mainly clubs, community groups, not-for-profit organisations. You see a fair few of our Indigenous organisations set up as associations. But for the purpose of running a business, like most members at Kinaway are running, normally an incorporated association is not the one of the most common type of entities. So what I want to do now is give you an insight. I was explaining the structures and I mentioned some of these already, but a shareholders agreement is an important agreement to have when looking at company structures. Partnership agreements, what I referred to with respect to partnerships earlier, and they can be really useful in understanding when the liabilities, rights, obligations of partners are involved. There's unit trust deeds and unit holders agreements. So trusts, and in particular unit trusts, are a little similar to a company in that you have an entity structure that's set up where you can have unit holders with similar kind of rights to what a shareholder has in a company arrangement, except for the unit holders don't specifically have any ownership interest in any of the assets. There's a benefit, it's called beneficial relationship, where you have a trustee who manages the unit trust for the benefit of the beneficiaries. Accountants generally love trust structures, and therefore unit trust deeds and unit holders agreements can become very relevant if you set up a unit trust. Most of the time, just from my legal perspective, I personally don't see much more in terms of benefit in terms of having a unit trust as opposed to having a company. But there can be some significant tax considerations. So if you want to know more about unit trusts, then you should have a chat with your accountant. What I want to do is give you some insight into shareholders agreements. Now, the reason why I choose shareholders agreements to give you some more insight into is there's a couple of reasons. Number one, some of the things that are in shareholders agreements, some of those legal obligations, rights, some of the clauses, they're also in other forms of agreement. The other reason is because most often a company is a very good business structure to have, and a shareholders agreement is the agreement between shareholders, so it's very useful to know about. Shareholders agreements do govern the relationship between shareholders and the directors of the company and the company itself. There's no two businesses the same, as shareholders agreements need to be tailored specifically for your situation, but some of the issues that come out in shareholders agreements are to do with issuing new shares, selling shares, the duties of directors, the rights of shareholders, how the board is going to operate, how disputes are going to be resolved. And some questions you need to ask when setting up your shareholders agreement is, who are the members going to be? What are the voting rights of the members going to be? Who are the directors going to be? And who gets to choose the directors? It's common to have each member choose a director, but that's not always the case. The shareholders agreement needs to set out how will the important business decisions be approved. Shareholders agreement needs to also set out what's going to happen in terms of selling shares. How is more equity or more funds financing arranged for the purposes of the business and the company that operates that business? And really, most importantly, perhaps, a shareholders agreement sets out how business decisions are going to be made. It's really important because when you've got a number of shareholders and directors involved, you want to do all that you possibly can to ensure everything's transparent, above board, and you want to make sure that you can avoid any disputes from arising. So what I want to do is give you a heads up on this as well, because Boost Legal Templates has got an amazing shareholders agreement. This shareholders agreement is one of the best agreements I've seen. It also is easy to create. You can go through a questionnaire process that covers each of these points that we've just been speaking about, and it's easy, meaning the shareholders agreement can be created for you in a very efficient manner, and then you can receive your shareholders agreement almost instantaneously once you've been through the questionnaire process. When you jump onto Boost Legal Templates and you're asked about the shareholders agreement, these are the sort of questions that will come up. First up, what's being created? You can choose shares for a shareholders agreement. And then, will the company have any wholly owned subsidiaries? So if there's any subsidiaries within your corporate group, you can choose yes. If it's a more straight-lined type of structure, you would then choose no. One of the concepts we have in the Boost Legal Templates shareholders agreement is the idea of having a key security holder. These key security holders have important rights. They've got the right to appoint or remove a director, and the company can't make any key decisions or undertake any key actions without the written approval of a key security holder. You can actually choose what those key decisions are going to be. And it's particularly useful, especially if you've got a company where you're thinking about bringing on some more shareholders down the track. You can then make sure that you've got the key rights to make key certain decisions. And this provision itself can be very, very helpful in terms of safeguarding against blackcladding, which I'm sure most of you have heard about. You can set out the amount of voting power by a key security holder. So you could even say, look, in these certain decisions, the key person, perhaps yourself, is going to have 20%, 30%, or 100% of the voting power in particular key decisions. The approach to calculating the voting power is actually quite straightforward, because you can either have the typical approach. That typical approach is saying, based on every single share that's held, you get one vote. Or you can have an alternative approach. You might say the key security holder, as an example, might only have 5 shares, but they could have still that 100% voting rights in certain areas that you choose. The Boost Legal Templates shareholders agreement has the non-compete and non-solicitation clauses. So what are these? Well, these non-compete and non-solicitation clauses are particularly helpful, and they actually flow on nicely. If you saw the presentation that I gave last week on intellectual property, these clauses are very much related to intellectual property ideas. What they mean is, if a business is being operated through the company, then later on down the track, a director decides to leave that particular business, there can be a particular restriction on the ability of that director to be able to compete. It means that the business itself is protected, the intellectual property, client lists, data, processes, things like that can also be protected through the non-compete and non-solicitation clauses. When setting up your shareholders agreement, you can describe your business. You can set out how frequently you're going to have the board meetings. So the board meetings are the meetings of the directors. You can set out the notice requirements, set out the number of votes per each director. And the approach to voting by the board can really be done in a couple of main ways. One of the main ways is by the typical approach. That's having resolutions of the board, so directors themselves passing and making decisions by the majority of those directors. So just say you've got 5 directors. The typical approach is if you have 3 or more directors that agree on something, bang, it's taken as being a decision for the benefit of the company. But instead, you can have an alternative approach. The alternative approach could be only if say all shares, so all directors representing shareholders with the majority of shares agree on a decision, then a decision's passed. There's actually some flexibility in the alternative approach. And when you go through the questionnaire process, there's some guidance there to help you choose which approach you would like to have most. When going through the questionnaire process on Boost Legal Templates, it asks you about the information requirements. So you could have a clause in your agreement that says certain information cannot be accessed for certain reasons to do with protection of confidential information and the like. You can also then have some things about additional funding. So if you've got the members that come about, put some seed capital, some finance into the business to begin with, the company then holds that financial benefits. There's some money there in the company's account that the company can use. If that goes dry, for example, in this particular COVID period where you're facing some particular difficulties, you can have some requirements that says that the shareholders are going to put more money into the company. You can also have some insurance requirements for the directors, for the shareholders set out in the agreement. You can have some clauses about good leaver, bad leaver. Good leaver, bad leaver is really about how did the director leave? Was the director sacked from their position, or did the director serve for 10 years and then decide to retire? Different circumstances can come about based on the way that the director left from being involved in the company. And you can also have clauses in the agreement about default. So if there's a breach of some obligations by a director, for example, then some penalties can apply, and they can all be set out in the shareholders agreement to protect you and your company. There can also be some points about approval of actions. So for certain things like approving a business plan, buying, selling assets, some specific unusual transactions, some significant events like buying a significant asset, those kind of things can have the approval mechanisms to help you, and they can be set out in your shareholders agreement. Also, you can have a confidentiality clause in your shareholders agreement, which we touched on a bit earlier. You can also have a default interest clause. The way that would apply would be, just say you've got some events that mean that members have to contribute a bit more finance into the company, and that finance isn't provided in time. You could then have some default interest if you wanted to, but you don't need to have these clauses. These are just some flexibilities around the way you can have your shareholders agreement specifically designed for you through Boost Legal Templates. The costs of the agreement can also be set out into your shareholders agreement, saying who's going to pay for the costs of the shareholders agreement. This is quite straightforward and also a very easy decision to make, we think, given Boost Legal Templates shareholders agreement are only at about a fraction of the cost as to what it would normally be with a lawyer. It's only about, I think it's about $200, $300, or perhaps $400. I'm not sure. You just need to check out the Boost Legal Templates pricing, which we've just adjusted. And remember that you get that 25% discount if you are a Kinaway member. That's a great saving, because if you're going to have a lawyer to write a shareholders agreement for you, it could easily be a couple of $1,000s or more. You can choose the governing law that's going to take care of your company, and you can also set out how many shareholders and directors are going to be in this company shareholder agreement. That's it. So we are very pleased to be bringing Boost legal templates together with Kinaway. Remember, you get 25% off on all templates using the Kinaway code. And this is also really helpful for you to know as well. When you check out the Boost Legal Templates website, you'll see much more than just the shareholders agreement on there. I hope this process in talking you through the steps involved and some of the questions that can come up with shareholders agreements helps you understand how easy it all is. And when you check out the Boost Legal Templates website, you'll see other agreements such as one-page non-disclosure agreements to protect your confidential information, contractor agreements so you can have your contractors sign up to make sure they're doing their job for you and your business properly, service agreements so you can give those to your customers that sets out payment terms, what you're going to be doing in your services and the like, plus there's more. So you can contact Kinaway or you can contact us through the Boost Legal Templates website to find out more. And you can also inquire and get the benefit of the 25% off in all templates using the Kinaway code. That's the end of my presentation. One thing is I heard a quote the other day that said that the problem with the law is lawyers. And I think that can apply with Boost Legal Templates. One of the other benefits with Boost Legal Templates is you don't have to deal with a lawyer. You can have the agreement designed specifically for you. Thank you.
Wonderful. Thanks, Matty. Thanks for joining us this morning and for last Wednesday as well. Some really helpful and valuable information, particularly today about our business structures for our members. And I think, something that really will find valuable moving forward. So, just want to thank you again for joining us.
Thank you, brother.
You're welcome. And I know we've got a few questions that come through as well. So, we'll bring those up on the screen, and if we can just go through a couple of those. So the first one is from Stephen, and he asks, thanks, Matty. If I haven't got the business structure from the start, can I change it throughout the life of my business?
You definitely can change your business structure throughout the life of your business. There's just some extra considerations. So there might be some registrations, there might be some contracts or agreements you've got in place and things like that. But generally, those things can be quite easily transferred. There's some extra tax considerations when you're transferring it across. But yes, it can be done, which is the good news, I guess.
Sure. Hope that helps, Stephen. Next one is from Graham, and he asks, what sort of reporting requirements are there for businesses?
Yep. So that's an excellent question, Graham. Thank you very much for that one. There's some variation, right? So remember, we're talking about the different business structures. So depending on the structure, there can be different reporting requirements. If we look at a company, there's reporting that takes place in the directors' meetings amongst the board. There's reporting that takes place to members. There's the ASIC annual statement that needs to be lodged. There's also reporting with the ATO. So there's a range of reporting requirements that do take place, and it's important that you understand what they are. I think once you get the flow of things, the company reporting, even though there's a bit more regulation, it's generally quite easy to stay on top of. The other structures themselves don't have as much reporting as a company. So for example, partnership, sole trader, they're a bit less regulated specifically in terms of reporting.
Sure. Next one. I'm thinking about going into a partnership with a good mate. Do I really need to have legal documents? If so, does Boost have these templates? That might have come through earlier.
Do you know the name of that person that sent that one through?
No, it didn't pop up for this one.
All right. I just want to say the answer to that one is, please go back to what I was talking about before about partnerships.
Yeah.
And I personally warn against partnerships, and I advise you to get proper advice about any other kind of arrangement and structure that might be more worthwhile. A company can operate when you've got two people involved, and it still means that it might be the best structure for you.
Sure. Next one's from Annie, and she asks, thanks for today, Maddie. Can I employ people if I'm a sole trader? And if so, are there any obligations I need to comply with? I heard things like super and workers' comp.
Absolutely. You can employ people as a sole trader, which is great. On Boost Legal Templates, we've got an employment agreement, and I say that only because it does help in terms of making sure that the employment obligations are satisfied. Then you also do need to remember to pay those things like super, work cover. You need to pay the tax obligations and the like. So make sure that you've got the proper advice that you need, and make sure you understand the obligations under the Fair Work Act and any award that might apply to you as well.
Sure. Hope that helps, Annie. I think we have another one from Annie, and she asks, are there different types of partnerships?
There are different types of partnerships, but the essence of partnerships are generally the same. And the test under the Partnership Act is if you have two or more people carrying on an enterprise with a view to profit, you can then be taken as being a partnership if one of the other structures don't apply. So that's why I'm saying registering your company, having a company constitution, having a shareholders agreement all in place is one of the best ways of being legally protected.
Sure. We got a couple more. The next one is from Janice, and she asks, aren't there small business tax concessions available, regardless of business structure type, just as long as we meet some criteria like annual turnover?
That's a great question, Janice, and I can only say I think, because this is more of a question for an accountant specifically on these tax issues, but I think that there are some small business tax concessions available. The ATO website has a fair bit of information about these kind of things, and obviously through the COVID scheme that's been set up, there's some additional considerations and some things to know about with those tax concessions. So I think that what you should do is check out the ATO website, speak with your accountant, and just make sure you understand all of the turnover requirements and the tax concessions available.
Sure. I hope that helps, Janice. We got two more. First one's from John, and he asks, I've usually operated as a sole trader. Do I need to have a separate bank account if I start a company?
You would need to have a separate bank account to have the funds of the company, John. The reason for that is when you open up the bank account in your own name, that's having you as the legal person owning those funds. But remember I was saying before about a company being its own separate legal entity? What that means is you're best off to have funds for your company, and for the company to hold those funds, it would need to have its own bank account rather than using the bank account that you've currently got set up.
Sure. Hope that helps, John. And this is the final question for this morning, Maddie. It's from Natasha, and she asks, how do I close a business? Are there any formal actions I need to take?
Definitely, Natasha. And one of the things that I like about your question is beginning with the end in mind. So we're talking about, having the right structure set up, and that being really important in terms of the way of operating your business and succeeding in your business, and thinking about closing your business is a very important consideration. So I really appreciate this question. There are definitely formal actions that you need to take. Those formal actions do come down to the reason for closing. So if you look at a company, for example, a company can be deregistered, and the deregistration can occur by the company and its directors' own choosing in some circumstances. In other instances, ASIC itself can deregister a company. A liquidator can be appointed if the company doesn't have the assets to remain in its operation. So there's just some of the ways in which a company can be closed down if that's the business structure you've chosen. If you're a sole trader, then bankruptcy provisions and things like that can be triggered. In terms of the formal actions that you need to take, there are tons of formal actions to take, and that's a really wide question. I guess to be able to give you some insight onto that, I think what you need to do is understand which business structure you're in, understand the reason for why you might be wanting to close down, and then get advice on the steps that are required so that you can take the right actions in closing down. For example, if it's a company liquidating, making sure you've got the liquidation process underway and the steps covered.
Sure. Great. I think that is it for the questions, Matty. So once again, on behalf of Kinaway and all the members who have tuned in, we just want to thank you for today's webinar and for last Wednesday's as well.
Thank you very much, James. It's been a real pleasure, and I hope Kinaway and its members find this very useful.
Absolutely, and of course there is access to the Boost legal templates as well, which is available to the Kinaway. So we encourage everyone to contact the team here at Kinaway, and we can put you in touch with Boost legal templates, and you can get that 25% off as well. I'd just like to also thank everyone who tuned in for this morning. Before I quickly go, I want to remind everyone that we are back on Friday morning as we have a very special guest. We have Kinaway's own Liam Medina, who will be joining us. And Liam will be running our members through the newly implemented Kinaway Business Directory, as it has plenty of new features and functions, making it easier for Kinaway members to display their business and to find other businesses. So be sure to tune in then, as this will help you to get the most out of our new directory. Once again, I'd like to thank Matt and thank everyone who tuned in this morning. We look forward to you all joining us on Friday. And as always, please make sure to leave a like on this morning's video, subscribe, turn on the notifications, and have a good day.